Too many traders overcomplicate the system. I know, I've been there myself. So today we're going to go through 28 pairs once again on a 4-hour time frame, showing you exactly how simple it is to mark up your structures, supply and demand zones and imbalances to know when you're looking for a trade. Now once again, this will be a long video, so please be prepared to watch this all the way through, because it's going to give you some golden nuggets as we go through this video. Now remember, this video is for educational purposes only. I'm not a financial advisor, so when you watch this video, go away and do your own analysis. That is how you will learn and become a better trader yourself. This will help you to become profitable if you are already struggling. So we're going to start with the EURUSD, work our way through those pairs again, all the way through all these pairs until we get to BTC. Okay, some of you like to trade Bitcoin. We'll go through that as well today. On the 4-hour time frame, it won't take too long this video, but it's going to take longer than normal. So the first thing we need to do is we mark up a market structure. So we can mark this level across. This is my break of structure. We then have a pullback and a continuation to run the high. So currently we've swept that high. Now a sweep of a high can potentially reverse lower. But the next thing we have to do is we need to mark up an area of supply or demand. So an area of demand here, we have an area of demand we can mark here. And it's off this last candle, we retest it and we rally away. This leaves a new area of demand I can mark here. We came very close to testing it and we ran for the high. So straight away, if we get a push through this high, we'll have a new area of demand that we can draw. And I would draw the demand like this. See how the demand is starting to stack. Order flow comes into play. If you haven't seen the order flow playlist, I do suggest get ready to watch that, because the first video for the playlist is coming out this weekend. So we now look for one more thing to help identify a potential trade, and that is our imbalances. So understanding imbalance, we can use this for order flow as well, but we can also use it for the current leftover area of imbalance, where we have blocks of orders sitting within this area. Now I'm talking about blocks of orders, not the rubbish order blocks or anything like that, because all order blocks are blocks of supply and demand zones. Blocks of orders left over within these candles. That's what I'm talking about. Now you don't have to mark the imbalance between. You can actually mark it as a full candle. That will also work. What do I mean by this? Well, we have this candle here was in fact the imbalance, and you can see price came back into that imbalance and we pushed away. The same again, we can look over here. What do we have? We have a nice big imbalance candle. Where did price come back into? And straight after that, we had another imbalance candle. Where did the market push back into before we pushed away? Okay, so imbalances, it's a way of reading the markets. Now you can check out the full playlist in this channel for imbalances or supply and demand or market structure. So I do suggest watch this video first. It's going to help you see how we mark it up, then go through and watch individual video within those playlists to take your trading to the next level. Like I said, I've been where you are now. I was struggling, overcomplicate everything when you don't need to. And this is it, okay? This is all we need to mark on this chart. That's all we need to know where price is going. We now know, based on this, grab that tool, based on this information here, that we're bullish. And we stay bullish until we start reversing through imbalances, through areas of demand, and we shift structure. This is our strong low structure. If we shift through, then we can start seeing a reversal of structure. But the first indication is order flow. Now that's the euro. Let's go to the next pair. That's going to be the euro Japanese yen. And straight away, we're going to do the same thing. We look at our last structure. Well, we had a push down, pull back. Internally, we've been pushing higher. Now we can mark off the last break of structure. Let's go closer into this price. We have a break of structure to the upside. We also had another shift to the upside there. Market pushed up, pulled back, broke to downside. So we just had a shift to the downside. Where is that coming from? Well, I can mark off this area here of imbalance. That's where price is coming out of. That leftover imbalance where there's orders. This is why price drops like it does. Now, we also have this dropout, leaves me this area of supply. So we have an area of supply, previous imbalance we're bouncing out of. We have a potential reversal bearish bias. Now, long term, we do have a larger move within the market. We have a swing high and a swing low. Potentially, this could be a reversal structure internally to run for this low. So I know ahead of time where potentially we could be looking for a trade. Now, what about looking at this as our order flow? Well, previous order flow was bullish in the market. And let me just take it off this candle. This is my last order flow, which was bullish. We came back in, we held, we pushed up and reversed to the downside. That creates a new bearish order flow for me. So we can look for the market to pull back up inside this area, okay, of imbalance or towards this area of supply to look for any potential shorts to the downside. To continue with the current flow of price and the direction for this potential low. Now we can also look where the last swing low was here. We pushed up, we pulled back, continued. So this is a valid break of structure. What about if we look at previous area of demand? Let's get rid of this. Area of demand would have been this move here. Would have been my demand zone. And you can see that got run through. So we can see we've shifted in structure. We've also removed a demand. What happens when we remove a demand? We create a new supply. This is our supply. And we also had, like I said, this was, and mark it out, a previous area of order flow. Price failed and we closed through, creating this new bearish order flow. So we have everything indicating that price wants to run lower from here. Now, obviously, you can confirm this by looking at higher time frames, but today we're just concentrating quickly on one single time frame. So this for me is currently a bearish bias. So we'll go over to the next pair, and that is going to be the EURAUD. Before we carry on, let me just grab a quick drink. Now, if you're new here, in this channel, we like to provide you with the education you need to be able to succeed on your own. Be able to read the markets, understand what's happening, and to be able to become profitable. Okay, I do offer services to help you, okay, become a better trader. We currently have some great courses. One, the Profit Trade Workshop, which does cover supply and demand trading. But this video is not about advertising to you what I actually have to help you trade. This is to help you trade with reading what I'm sharing right now. So we do the same thing again. What do we start with? Okay, we start with market structure. Always start with your structures. This is a previous break of structure to the upside. That means we have this low, okay, needs to be broken. So currently the bullish move was up. We've pulled back. Looks like we're going to push through, but we need to see that shift in structure. Now, what about areas of demand? We have an area of demand that we can mark here. Of course, this is our demand zone. We tapped it once and we went higher, tapped it again, and then we pushed deeper. The more times we see a demand zone getting tested, okay, the more likely it's going to fail. Now, we also have another thing we can use here. We have the actual first candle here in order flow, where we see this is being held by this candle. So we push away, pull back, and we continue up. Let me just go in closer. After this, we create this push out. okay, where the market actually comes back into. We try to push away and we push through. That reverses that area. So now we're looking at is once this candle here gets closed through, let me just bring that down. Once it closes through this low, which is now about to do, we know it's going to take the demand at the same time. So currently looking like a reversal of flows and potentially a reversal of structure and a removal of demand. Now we can look at the internal movement down. We have an area of supply we can mark here. Where did the price come to? We came back to that supply and we ran lower. So you can see internally we have a break of structure here. A pullback into the supply. And another break of structure. Now this is internal pullback. But potentially this can become a full shift in the larger swing. So that is what I'm looking for on the EURAUD, a shift in structure now, continuation. What that's going to show me is new order flow. So we have a bearish order flow created. Right here, we can see a continuation with our order flow as we continue to fall. So the market continues to drop away, pushing out of that area. And again, you'll be able to learn this order flow in the new playlist. Again, the market pushes out once again. So this is what we're looking at the moment on the EURAUD for a full reversal. We wait and we see if we can break that structure, reversing everything, then we can start to look to sell. So let's now head over to the next pair, and that is going to be looking at the Euro New Zealand. So again, we need to do the same thing once again. We look at our structure. So a previous break of structure head to the upside, leaves this swing low. And again, we're waiting for the swing to be removed to reverse that structure. And we'd have here an area of demand. Okay, we can mark this out. Hasn't yet been removed. So it's still holding price. We have a very strong push away out of that demand, which does leave a new area of demand that I would mark here. We could come back to. So looking at price, okay, we're still bullish. We could still run for this swing high, but if we followed what we're seeing on the EURAUD, we could see a reversal completely of this last move up. And all this is to bring in the last few buys before reversing that market. Now, what about our order flow with our imbalance? We have a strong push up here. It's going to leave an area of imbalance. That would be this area left over here. And again, we can mark that up as a full candle. We can see where price is now sitting inside. Now, if we look at the bearish movement, we have a push up, okay, drop, pull back, a drop. This is our first drop out of order flow bearish, and price came back to that area, and then we've just dropped out again with this move, which creates more bearish order flow. So it looks like to me that the market will actually continue to push lower and remove this previous swing to reverse it. That's what I'll be looking at. Mainly we see the Euro New Zealand and the EURAUD, they tend to move in the same direction. So if one is lagging behind, we could see a strong push down to reverse this move. So that is the Euro New Zealand on that 4-hour time frame. Let's now look at the next pair, which is the Euro British Pound. And again, I know it's very tedious, it's the same thing over and over again, but it helps you to quickly identify what's happening. Our last swing structure was this move to the upside, but unlike those other pairs, we actually formed this sweep at the high. This indicates the market straight away to me would run this low, which we did, and we pushed through. So if we now look at areas of demand, we do have an area of demand I could draw here. Price may come back to. We had a previous demand zone which got reversed right there. And that did create an internal shift with an area of supply I can mark here in the market. If I grab the right box. Didn't quite come back to that supply, very, very close. But then we also have this drop, okay, pullback continuation. Internally, you can see that we have another break of structure. We have some smaller breaks within, and all they're doing is pushing back deeper into this imbalance candle. So we can mark off this full candle. Okay, previously we have this as a bullish order flow here, and that gets reversed through eventually here to downside. So we can mark it off. We did reverse it out with this candle. Okay, so that puts us back on a bearish bias. So internally, okay, we could see this is supply. This is new supply as well. And the markets continue to be bearish. If we look at our last order flow, this is a potential area we could see a pullback into this candle or into this supply for another run lower. We do have to bear in mind where this area of demand sits. We could come back to that demand. We had a previous rally-based rally demand zone right here. The market has shifted through it. And we do have this imbalance moving up here, this move where the market, if we just mark out that small imbalance there, we've now closed through that imbalance. So it does suggest we may continue towards this demand. So for me, this pair right now, let's remove these zones. We're looking for the continuation, potential pullback, continuation lower. That's what we're looking for here. Now we are looking at a potential push through reversal, so we could see a pullback pretty quickly on this pair. That's going to show us the strength and the weakness for that euro or the pound. Okay, and it's going to help you to be able to take those trades, especially if we see the euro Japanese yen and the pound Japanese yen, and we want to be trading the best pair. We can use the euro Great British pound to help with that. So that is what I'm looking at on the euro Great British pound, the 4-hour time frame. Now we're going to go over to the euro Swiss franc, which is the last currency in these euros. And again, look, on a larger swing, we broke this swing low, which means we have this low here in the market, and we had this high as a trading range. Now, since then, the market has reversed and continued bullish all the way up towards this high. Now, I'm quickly going to show you where we can see the order flow starting to be bullish, and we continue to be bullish here, holding as price continues to push up. And eventually, we have another small area here, and finally this move here. So price holds at this area, and we're looking for the continuation to push up to run this high. So I'm going to leave that for now, but what you need to understand is that the order flow has been bullish. We have an area of supply, which is right here. Now, that's my last area of supply. Price is heading towards that area. And if we look for an area of demand, this would be my demand zone. I would draw. We didn't quite come back to that demand. Okay, but we have come inside that imbalance area. Again, this is just showing you that imbalance candle. If we actually bring it down, this would be the very, very small leftover imbalance is just sitting there. We haven't quite come into it. Very often you're not going to see those areas get fully filled, but the candle shows you that zone where price is. So what we're looking for now is the continuation of the strength here to run up through this high. Now that does mean I want to see this last candle here getting pushed through for that reversal. But for now, okay, you can see we just created this sweep right there, a sweep of a low, potential bullish move to run this high. Until we reverse this candle here, this bullish candle, and we take out the demand, okay, that structure to the upside, which is that internal structure we can see, breaking structure here, until this is all reversed, and this becomes your strong sort of low down here. Until that all gets reversed, we stay bullish for that internal structure. So that's the euro Swiss franc, and that is the euro pairs. Okay, we can identify by going through those pairs quickly again. The euro USD is bullish. The euro Japanese yen potentially shifting bearish. Euro AUD could shift bearish as well. Euro New Zealand potentially could shift bearish, is still bullish. Euro Great British Pound is definitely looking bearish at the moment, and the Euro Swiss franc is still looking bullish. So there's some mixed signals here at the moment. We don't have a full weakness or full strength on the euro on its own. That's where it comes into going through the other pairs we're going to go through to give us an idea of the strength and the weakness of those other currencies. The pound US dollar is the next pair we're going to look at today. Let me just grab another drink. This video will go on for some time. Now, if you have been struggling in your trading, please drop a comment down below. Just let me know what it is you are struggling in. Then we potentially look at doing a video in the channel to address those problems to help you where I can. So again, we're going to start with that structure in the market. We have a structure break we can mark here. And then straight after that, you can see we have this sweep. Now, there is a playlist in the channel that goes through liquidity sweeps. So if you're not sure about liquidity, understanding that, I do suggest watching that, and I'll leave a link above now for you to go through and see that actual playlist. Now, after this, we have the breaker structure here, which is the breaker structure after we see the sweep. The main structure break comes here. Now, by this, we have a structure push down. We break out like this because we can't look at this as a break of structure. A sweep is not a break of structure, but it is a liquidity sweep of a low which shows a reversal. And the way we can do this, we can identify this as a start of a bullish order flow. The market pushes away, and then as we push away, we then have a new order flow we can see happening here. We come back into it, fully fill, and then we continue on its way, and we have another breaker structure. So I'm not saying we're looking for trades here, but once you see this push away, you can start to look for trades here. And what do we have here? We have a lovely looking sweep once again. See how these keep appearing, these sweeps. There is a trade you can take here, understanding what's happening in the market, but to help you understand further, what we actually do is the market makes a break of structure, then breaks here, pulls back and continues. So that's your true structure in the market. But this is a reversal in the market. There's two different things altogether. And once we see this leftover imbalance, that's where the market pulls into, and you can look to run towards this high here where the market goes. So currently we are bullish. We'll be looking to pull back to areas, okay, of potential demand. Here's my area of demand that I would draw. And we do have some imbalances on these candles here, where the market may want to come back into these candles for potential move higher. It's looking more like we may make another swing pullback potentially into demand, but we could hold at these imbalances and we push higher from here. Now, the way we'll do this, we will look at the lower time frame and look for a potential entry. That's understanding how we use the lower time frame for our entries. Now, obviously, whatever you do on any time frame I'm showing you right now, you can apply on the lower time frames, the higher time frames, to help you with your trading. I have so many comments I see that people ask and they say they're struggling with a lower time frame, but all you have to do is apply the same concepts that I share on whichever time frame it's on onto every time frame. It is universal and fractal in nature. And this is where I believe too many will basically overcomplicate their trading. You don't need to. So this is where I'll be looking potentially for pullback here, continuation, or a deeper pullback to the area of demand. Understanding as well the trading range we're in at the moment is from this high to this low. And we're pushing up against that range. So that's the pound US dollar. Let's now look at the next pair, which is the pound Japanese yen. So again, we're going to do the same thing. We do have this stronger move to downside we're pulling against. Internally, we had a break of structure here to the upside. we have a drop-based drop area here of supply, where the price come to into that supply. And it's critical to understand. So understanding that we have a low here in the market, price could run to from this area if we see a shift in structure. Now the structure itself would be this swing low. Now if we look at the area of order flow, we have a last order flow push up here. Then we just look what we got. We got an order flow. This will help you to understand what I'm talking about, order flow. And don't worry if you don't understand what I'm doing here, because it's all inside that new order flow playlist. We have a push up here. So the market pushes up, pushes up. We do have a push out, I would say, with this candle here then, the one I actually marked. And the final push up is going to be this move here. Now that is just about, not yet, but if we get pushed through, is going to show reversal. Now obviously we also got an internal area of demand that we can mark here as well, where we're sitting inside. So until the market reverses by pushing through this demand, this big bullish candle, and takes out this structure low, we will not be fully bearish. You just need to understand what is happening. We have this swing pullback against this area. We do have a reversal up this high to pull back to this area, but for full reversal, you want to see the market pushing through, pulling back into this new candle to run lower. And what I mean is through this candle here. So we'll see the market push down, pulls back, continues to be bearish until we run this low. Very, very simple. We don't need all of this on our charts. We don't need half of this on our charts. All we need to understand is, we'll need this at the moment, is if we reverse through structure, through demand, through this bullish candle, then we could potentially be bearish coming out of this area of a drop-based drop area of supply. Now, if we hold here and we push higher, reversing through this high, then we continue with the bullish trend, and this order flow will continue to hold. So that is the pound Japanese yen. Let's look at the pound Swiss franc. Now, I do know this video has been on for a while now, potentially nearly half an hour perhaps. And I do thank you for, and I do appreciate you still watching this video. I hope it's giving you some good insights on the way we should be looking at marking up your charts. And again, that will do the same thing. Our trading range is from this high to this low. That's our last swing to downside. Internally, we've been shifting, okay, bullish. This is how you can easily see that bullish market by adding your structures. I know I haven't been doing this on all the time frames, but I will do it occasionally to show you how you can read that structure. That gives us an area of demand that we can mark out right here. Potentially we could pull back to demand. We stay bullish. If we look at the previous order flow, that's coming out that move there, and this would be the next order flow. So we could be holding here with a potential sweep that we can see in the market now. So a potential sweep to run higher, breaking through this high. Now we do also have this area of a drop-based drop supply, which has been holding, okay, until we run through the high. We've held at that area. So potentially it's looking for a continuation higher. We're still bullish until what? Until the market decides to either push up, then pulls back to continue higher, or if we see a deeper pullback to go higher at the demand. And finally, the other option is we could see the market reversing completely to run for this low. Now, if we start seeing the other pairs becoming weak with the pound, then potentially we could see this reversing. If they stay strong, then we can see the bullish move. Now, the only pair at the moment which is weak is the pound Japanese yen pair. Let's now go over to the next pair, which is the pound AUD. So again, we're going to do the same thing as we previously did. Now, straight away, I can see what's happened here is this big sweep in the up on this market after this break of structure was here. So that gives me a potential reversal off this low. Now we did push down, reversed structure, push back up. We had to go a long way up there to get some liquidity to then reverse the market lower. Now this is then the next break of structure, and we start to be bearish. Now as the market pushes through there, this candle becomes a potential order flow, and we could drag that across where we can see prices being holding within that area. And again, we've just created this sweep. So you can see how these sweeps will actually show you the direction of the market, and you'll be looking for the market to basically run this low next. And if we run through that low, we then create the next potential order flow here as we push through. So there is the directional bias. Very quickly, we're looking for the run of this low next. If we look for any areas of potential demand, we do have a demand sitting there. Where did price bounce from previously? From that demand. And that's it. That's all we need on the chart. Okay. We just need to know that directional bias, where the market's going. So now we need to wait is for the market to potentially push lower, come back to new areas to sell again. And that's it. That's pound Audi done. We can move on to the next pair, which is pound New Zealand. Now, I'm expecting the pound New Zealand to look very similar. And let's have a look what happens. We had a major swing there. Broke through after this push up on that candle. And we're looking for price to run for this low. So that gives me this drop down. Okay, so we do have a nice big wick here. And that is an area of supply, not demand, supply in the market, where we've pushed up into, dropped down. I don't like them sort of areas though for supply. This is the supply that I would mark, and you can see exactly where price has come into. Okay, so we come back to supply and reversed, and we're dropping lower. So I expect price to continue here to run through this low. Okay, so looking for continuation to go lower. So that's how quickly and easy it was. Check to see where did this bounce from. Again, we do have an area of demand. I like the look of this demand here. Let's run through that demand, and the other demand would be this zone. Okay, so you can see price came into that demand. That's my demand. We've bounced off it. We have pushed up higher, pulled back, pushed up again into the supply. Now, what about my imbalances? Well, we have a small imbalance left over there. Potentially that could be where price is running into. And this would be my imbalance candle, where we haven't quite run through that high. We've just held at that area. So potentially reversal out to continue to fill the next imbalance. We do have this leftover imbalance here where price is bouncing off, but I'd like to see a push through that area and continue to run through that structure. So like I said, looking very similar, not as good or as clean as the pound Audi. You will find that the New Zealand crosses, like the euro or the pound, they're not always as nice and clean. So the pound Audi looks better to me at the moment for that direction, but potentially we could see the pound New Zealand want to catch up and see a run for that low. So that's the pound all done. Now we're going to go over to the Audi cross pairs, starting with the Audi US dollar. Now again, longer term, we have a swing low, and current swing high is my current trading range that we're within. I'd like to know where we're trading within. Now, once we get to this point, I can start to look at areas where I can see my order flow. So I have a bullish order flow in the market here. Very easy to see this. Again, okay, you can see where the market continues to be bullish. Eventually, we have another one there where price holds. And again, we have another one there. And price is pushed out here as well. And if you look closely, what do we get? Right there, we get another sweep in the market. They will occur everywhere. There's even one there that I can even just show you straight away. Another sweep there for continuation. So looking very bullish. Again, if we look at structure, That's my last break of structure. Now, normally we do the structure first. I didn't do it first this time, did I? I was wondering if anybody noticed. Again, break of structure. So you can see it's bullish. Okay, now the actual sweep of the low is this one. Okay, we just about made an equal low, but that is the main sweep you can see. But we're looking for this area to be swept potentially as well, by the looks of that. So the market now is bullish still, looking for pullbacks into these areas to continue higher. And again, there's ways we can look for this. If we look as well to the left, we have an area here of supply, the previous supply. We're sitting inside right now. So potentially we could look for this to be removed, then we can look for the next supply. Now we're not using these zones for a sell. We're using them to show us where price is likely to bounce from, to show us a reversal back. And again, if we're looking for a demand here, our previous demand is going to be this breakout area of demand. And then we also had this area of demand here, which got tested on this push out. Okay, so this looks like a good break, pullback, continuation. Okay, so there is a good area of demand potentially inside this candle to pull back to for another long. Remember, this is just using our structures, okay, with our supply and demand and potentially areas of imbalance and sweeps. So that is the AUD US dollar, still looking very bullish, looking for the pullback into demand, this imbalance. Remember, the imbalance itself is inside this candle. This leftover area of imbalance is sitting there, looking for that to pull back into. So let's now go over to the next pair on the AUD, and that is going to be the AUD Japanese yen. Now, it's been bearish across most pairs. And again, we had this area of a supply. Now that has been pushed through. Okay, so we've been swept through the high. That shows a potential continuation bullish. Now, if we look at the last break, there's a main swing break here in the market. We have a trading range of this high down to this low. So we're trading bullish against that. Internally, we can look at the breaks of structure to the upside. And you can see where the market continues to push higher. And then we eventually pull back into this area of demand. So looking for continuation to do what? To run this high up here. Grab another level. Looking price to run this higher. So looking for that continuation. Now that's showing us just the directional bias using really the structures with an area of demand. Now if we look at the order flow as well, we have a order flow candle pushing up. Okay, breaking up here. There's a big order flow candle. Smaller, we have a bounce off this one. Push away. Again, another bounce off this one here. And then we have the current candle. We could use this one here. So you can identify the order flow is still very bullish here. And we'd just be looking for potential run up to run this high. Now, on a lower time frame, we may also see a potential sweep around about here somewhere. Okay, based on that low of that inside candle there and a push through. So until we again reverse down, taking out this imbalance, this area of demand, this structure low, being this low here in the market, until we reverse all of this, we stay bullish. And we're looking for the market to run higher. So that is the AUD Japanese yen. Let's look at the next pair. And AUD Swiss franc. Now, if you are still here watching this video, I'd like to congratulate you because you've been here for some time. I hope it's going to help you to understand the simple process of marking a level of structure, okay, for direction, and swing high here for trading range to this low. Hey, you're getting some good tips here because I wasn't even going to show all this. And for an area of supply would be this move here, which is off the range high. Price is now bouncing out of that area. And then we go to the internal structure, which is the break up. Okay, another break higher. And as I was saying, if you're still here watching this, this is going to improve your trading, especially your technical analysis before taking that trade, which is important because without great technical analysis before taking a trade, you could be easily entering the wrong side of the market. So we have a bigger range we're putting up against bullish order flow with our structure. Our last area of demand was here, which we've broken through. We are in an area of supply, but I'm looking to sell off this supply at the moment until we shift back through this area of demand. And again, this would be our shift in structure here as well. So we have a bias. We're looking for a continuation to run through this level, an area of supply. Looking at an area of order flow. This is my last bullish order flow move. And again here. Market comes back, continues up. Now, potentially, we could say this candle's what's held price. And so on. We can look back in time. We can easily see where this order flow is coming from. Very, very easy to do. And this is the next one. Okay, we didn't quite come back into that candle, but that's how we look at the order flow. We don't need all this on. We can get rid of all that. And again, look, we just need to understand we need to wait now for the market to potentially just push through. Removing this high in area of supply gives some more room to move higher. Or if we don't do this, we need to wait to see if we can shift through, removing this area of demand, taking out this last push up here on this candle, and then looking for pullback, reversal of structure to then look to sell. Simple as that. No need to overcomplicate things. Keep your charts nice and clean. You don't even need as much as I've got on the charts, but obviously I'm trying to show you how to do it. So let's go over to the next pair, and that is going to be the Audi New Zealand. Now it's not a pair I like myself that much, but let's have a look. It does help with the strength and weakness of those two currencies. Again, look, we can identify back here we had a break of structure. So a BOS to the downside. Excuse me, get another drink. And we continue to be bearish. Another breakout there. Another break lower there. And eventually you can see we push out higher. So once we push out higher, we reverse the structure and we start to move bullish again. And eventually there. And this then gives us our current week high in the market. What about that trading range? That's going to run now from this high to this low. And we're bullish against this trading range. What about our areas of supply and demand? Well, we have an area of demand that we can draw there. Where's price now bounced out of the area of demand? Potentially we're looking for continuation higher to run this high to break through. And we can also identify we just created this sweep at that area of demand. Great area to look for sweeps out of areas of demand and imbalance. So again, look, we can identify these large candles are showing you the order flow. Okay, it's very bullish. I'm not going to leave these on, but you can see this is the order flow. And you're looking for a continuation out of that order flow to be bullish. So the big move up like this and another big move up, potentially we could see a nice big strong push up through this area, continue with this move up. So that's on the Audi New Zealand. That's telling me the Audi is stronger than New Zealand right now. So I want to be looking to trade with the Audi on a pair that is quite weak. Okay, so you could be looking to trade the Audi US dollar. The US dollar is currently potentially weak against the other pairs. So that would be a great pair to trade, the Audi US dollar, perhaps more than the New Zealand US dollar. So let's now go over to the next pair, and that is the New Zealand US dollar. And we can see what's happening here. So again, let's look at the trading range we're in. This high, okay, to, well, would be this low here originally. We swept through. And what about our structures? Well, we had a structure break here to downside. Some smaller structure here to downside as well. And eventually that shifted, okay, right here, bullish. pushed up, pulled back, and we have another shift up, continuation, bullish there. So we can see a continuation bullish in the market. Now, potentially, because we didn't actually push through until here, we do have a small minor you can look at, or you could look at this as a major low. And what do we see happen here at this low? We see a nice sweep. So we're looking for the market to basically run this high to continue up to this high here. What about areas of supply? Well, looking here to the left, this would be my supply. You can see the market is testing the area of supply. So we could see another run lower from here as we are inside a nice looking supply. What about areas of demand? Well, if we look down here, we have a nice origin demand zone that we could draw. Market may want to come to, but it's just the area of demand to see where price is going from. We have a demand. Let me just look. Well, we have this area of demand I'd like to draw as well, which broke out these highs. And we would have an area of potential supply here as well. Okay, this has been swept through the high. So that's the areas of demand and supply. We could also look at this area of demand as well, where we did bounce off and continued up, but I haven't got it drawn because we've swept through that low. And we don't want to keep those sort of zones on. Same here, there was a demand down here as well originally, which I would draw right there, but we got pushed through, swept through, so we can remove it. So our structure is actually bullish. Potentially, if we look at the smaller breakout we have here, so this move up is a shift in structure to downside, and then we reversed, okay, back up, breaking through. But I'm going to look at more of the bigger swing here of that sweep, expecting price to run this high. Now we could continue through, especially if we're seeing the weakness on the US dollar. So what about the imbalance, okay? What about looking for the strength? Well, there is a imbalance candle where we can see prices holding at. Before that, we did have this push up on this imbalance. So our order flow has been bullish there. We came back into the same candle, swept the low and pushed away. So as we pushed away, we created a new area of imbalance. Potentially the market could come back into that. So there is a bullish bias, but we do sit inside supply. We have swept the low, high. We could see a reversal pull back towards these imbalances. Another one here we could look for pull back into for continuation higher. What we're looking for now really is this high, the range high to be run. So the external range of this move down to be run. That's what we're actually looking for. So that is the New Zealand USD. Let's now look at the next pair. New Zealand Japanese yen. So again, let's start with what? Okay. In fact, would someone please type down in the comments the process you need to do this? Is it the imbalance, the supply and demand, structure, sweeps? What is it? What is the order we do first? Hopefully you've been paying attention. If you have, put it down in the comments. Let's see how many of you really have been watching this video and you know how to do it correctly now. Let's now carry on and we'll just put a small break of structure here to downside. And again, our trading range is then going to be from this high, which we haven't yet run, to this low. So that's a small trading range really we're in. But again, what about our supply zone? Well, it's going to be right here as our supply, where price has been coming into. So you're just waiting for that range high and supply to be removed, okay, for that push higher. Now, what about area of demand? Well, internally, structure being bullish, okay, internal structure pushing higher, break the structure there. We broke out there, and this high has not yet been broken through. So that means this is our breakout, pullback, looking for that continuation. We've only swept through at the moment. This becomes your potential strong low. That means we'll be looking for an area of demand from here. That's going to be right there. You can see the market's just coming into demand. So we'll be looking for price to move bullish from here to push through this supply and take this external range. Then we're looking for the new range high over here. So that is my bias on the New Zealand Japanese yen, looking bullish. Our order flow, where we have a nice big order flow candle right there. Okay, price held, and then we have a new one pushed out right there, and we're currently holding. Now we've only wicked through the low, so looking for continuation higher. That is New Zealand Japanese yen. The New Zealand Swiss franc is our next pair before we go over to those US dollar pairs. Again, the previous trading range was here where we pushed through. So we need to move that to a new high. That's going to be over here. Our low of the range is down here. And we've been bullish, okay, pushing up towards the high. So we have a break of structure, okay, another break of structure. Now it does mean we did have a shift bearish, and we can actually draw an area of supply. But when we see these moves like this, okay, one big drop on a candle, they're not really the moves you want to be looking for an entry out of. Expect those to normally get run. So I'd expect that to get it removed, that supply continuation higher. Looking for supply is here. Got room to move higher for that supply. And we're looking for price to basically run. Whoops. Get off that. Do that again. Sorry. Okay, looking for price to run through this high. If we run through that high, we'll create a new demand, which is right here, for potential pullback into. And if we look at our current order flow, we can see the market has first we held here. Let's grab a drink. And then we've actually pushed out of that zone with this candle. So you can see the order flow has been holding bullish. And then we just pushed out once again with this candle here. And again, we can see where price respects. Okay, as we push out these bigger candles, we're respecting those candles, and we continue to push higher. So New Zealand Swiss franc just looking for continuation higher, reversing back through on that structure. It is internal structure, and I'm expecting the market to still want to run at this previous high. So if we continue this, we can see a push up, potential pullback, eventually running through. So that is the New Zealand Swiss franc. That is the New Zealand pairs. We're now going to move over to the US dollar pairs, and that's going to start with the US dollar CAD. So before we do the structures, what do you see here? A great looking sweep in the market. Look at the way the market had to push all the way up here to find those orders, sweep that liquidity to reverse and then drop. When we see this, that creates an area of supply. That supply is going to be created once you see this internal breaker structure right there. So this is the main push higher, means this is the main structure shift, but we do have that internal structure shifting down as well within. Okay, so you can see that structure there. The market then pushes down. Okay, we have another break of structure, and again another break of structure, so we stay bearish. So our current, we don't need this area of supply, but our current supply, I would draw, is going to be off this move here. And look, I can even mark out the previous supply here dropping down. Very small zone. Price just came back into it. So we can see that we are bearish. If we look to the left over here, we do have an area. Let's just have a look at this demand first. We run through that demand. So this would be the demand zone. Currently holding. Yep. And again, not potentially looking for a buy from here. We're just looking for this to show us the bounce back to an area of supply. Below that, we have some more demand as well. For order flow, we know it's already bearish because we can see what's happening. We have the push down here. Okay. We push lower on that candle. Okay, so we can see the order flow continues to be bearish. Push lower again. The market eventually pushes out of this area. We hold. and we'll push out again. So we can see where this movement is still bearish. So we're just looking again, okay. So we're just looking for that pullback, that continuation once again to break this low, and then we continue to be bearish. Let's get rid of this. Why is it not green? Okay, so that's US dollar CAD. We'll look at the next pair, and that's US dollar Swiss franc. So what do? We start with that structure. Okay, let's look at the trading range first. There's our swing high, nice and quick. We know where the price is within. We know which way it's going. It's been going quite bullish. Now we know this by we can see the internal swings are bullish within this trading range. So we push through bullish again, and we push through again. Now we do have, okay, you can see here a quick one candle down, reversal, continue to push up. So we'll ignore this now, this push through. It's more of a sweep. There's a way to ignore this reversal on structure in a moment. I'll show you. Now we did have an area of demand that we could mark out there. It may just check on the low. That candle is 172. Low is 15. Yeah, so that has been pushed through. So that is in fact more of a sweep of the low. Let me just double check that again. 172. That low is 158. Yeah. So that is a sweep. So we could now see a run higher for this high still. Continuation bullish. Next we had a bullish move, pull back, swept. Could see another continuation higher. Why did we see this reversal lower? When we look to the left, we have an area of supply here where price bounced from. Okay, that's how quickly you can just look at the chart and see why things are moving like they are. We do have an area of demand here, which hasn't been swept, left over here. We didn't quite come into that demand. So what about the order flow imbalance? Okay, so we can identify we have a push up here, price held, we bounced out. Okay, we have another push up that we can mark right here, where price is now bouncing from. So we do have this bouncing up order flow holding. Now this last push up here, okay, has failed and we dropped back, and that's why we swept this low. So we're just looking for a continuation higher. Now what I need to see now really is the market shifting structure and pushing through this area here to show me a full reversal. But we could just basically run up, sweep the high, then reverse, or we could see a run for this full range. Currently, I'll be looking more bullish on the US dollar Swiss franc at the moment after this sweep, but we'd have to look at the lower time frames just to confirm the directional bias at the moment. But after a sweep like this, especially after we see this candle getting reversed, potentially we can see a bullish move. So that's US dollar Swiss franc, US dollar Singapore dollar. Now this looks straight away quite bearish to me. You don't need any structures or anything to see that, but we can identify we have a structure break, another break, and potentially another break. There's a very small minor reversal there, but it's very, very small. More of a drop, pullback, drop, pullback, drop. So what about those areas of supply? There's an area of supply there. Failed to come back to. Okay, we can also identify, let me just double check where we're looking at this, another area of supply, which did hold price, and then we continued lower. If we just look back, see if we can see nothing really that's broken that low, so we're very bearish here in the market. So new supply would be here. We don't need the old supply. What about our order flow? Well, our order flow, where we see the market pulling back into, is going to be this candle here. And then eventually we drop out of that for this move where price comes back into. So you can see how you can use these candles to help you to identify where the market's coming back into. Now, even if we didn't see, okay, we don't even have to have that across. We could actually see another push lower with this candle, which is where price comes back into. See how we're starting to push lower with that order flow. So what we're looking for next now is some kind of pullback, okay, coming back into something to drop lower. Now, we don't have to pull all the way back up into this area of supply or the next in candlestick here, which is dropping out with that order flow. We could just pull back, sorry, into like this candle even, where we see that wick up first. So it's an area there we could see price pulling back into before another run for this low. Very bearish now until we reverse structure, okay, removing areas of supply, the imbalance, we remain bearish. And this is our new smaller trading range. Okay, so if we start seeing a pullback, that's your trading range you're going to be within. Because we don't have anything larger to the left, we look at the current trading range. So let's now go over to the last pair, which is the US dollar Japanese yen in the US dollar pairs. And again, okay, we can draw out our current trading range first quickly. Then we can mark out those internal structures where we're seeing bullish movement. So our current low is down here, which has just been swept. Now, where is our supply? This is my supply. We didn't quite get to that supply. What about my last demand? Well, this would have been my last demand, but it's been swept, so we can't use it now. So we could look at this as a demand down here. And that's where the price had to sweep into. Okay, so the push up, pull back, push up, that's your demand. We pulled back, we pushed out. Demand was here. We did actually have the demand hold out of this move when we pushed up. Okay, so that's how you can look at it. So this is now pushed down into, swept the low into demand. And we could see price want to run up higher towards that area of supply. And we do have the next structure high. Okay, so that is potentially where we could see price want to move to. Now we also have to look at the current order flow on the way up. But we do have this pull back into this candle. Then we had this candle. Drag that across. So you can see we push out, and finally we push out with this candle. Right there. Now we've actually reversed order flow with this candle. So this now potentially means the actual bias could be shifting bearish again. So out of this movement, pushed above this high reversal, hold. If we hold within this candle, okay, so we hold here, whether we hold the 50%, the higher that candle, we could push lower from moving towards this swing low again. So my bias on this at the moment would be more bearish based on order flow, but looking at actual structure in the market, we've only swept that low, okay, and we still have this high we could run towards. Now, if we close through this candle, that's where we're going to go. If we hold, then potentially we could short for this low. So this is a bit more a harder one to read, should I say, because we've got some different signals. If we didn't have this shift in order flow there, then I would be definitely just looking for continuation higher based on everything else. So that's US dollar, Japanese yen. And finally, and remember, those Japanese yen pairs have been quite strong across the board. So it is a strong currency, is the Japanese yen right now. So it's more likely we could see this drop away. Let's have a look at gold. Okay, so again, we do our current break of structure. Now I know gold is in a new high, so we're not going to be in any other trading range except for this. That's my current move on gold. My area of demand is going to be here. That's where my area of demand is. And if I was to look at my current order flow, where we have this as a push up into that area, pushed out, and then we do have kind of like this candle. So we could just see the price coming back into this area and then pushing back up again. So bullish, okay? Nothing else to really look at this until the market decides it's going to run through this imbalance, the area of demand here, and through this low, then reverse structure to go lower. But for now, we stay bullish with gold. Silver. Let's have a look at silver. Okay, so now we are getting towards the end of this video. You've been here for a long time. I praise you for that. If you have been in the situation I've been in, this will be helping you to see how you can quickly mark up those charts, look for that best trade. So we have a break of structure, okay, sweep of a low here based on that. Trading range would be this high, which looks like we're going to run from this low here. So we've been bullish against that trading range. Oops, come back to that. That means we have an area of supply I can mark here, which we're now sitting within. Drag that across. It does look like this supply is going to be run. Okay, and we push through the high of this current trading range. But if we look at now the current move up, there's a break of structure. Okay, and then the market continues to be bullish here. Then there's the next break of structure. And here's our next break of structure. So you can see we're bullish. Our current area of demand, I would draw, it's going to be after that push lower is this move here. So again, look, we're inside supply. We could see a drop, yeah, back into this demand and then a push out. We could still see this happen. What about our order flow? Well, looking at order flow, we had to really shift through this move, which we did, put in this new reversal. Okay, which then actually, let me just show you, we held here. Now I do see a potential shift in order flow on that candle, but we just went down to sweep this low. That's where you got to understand everything, okay, what's happening in the market. Not one thing will tell you, you have to have everything together, okay? You need to understand everything. So we pushed through, and again, we pushed out of this move. We kind of like start to stack here, push up here, another push up, market comes back in with this candle, and again we push out with this one. So we've got a nice bullish order flow again now, nothing else but looking. We've just tagged this area already, this push down, higher low, we could continue up and break this move. So bullish, okay, on silver. And finally we'll look at BTC, and not a pair that I actually looked at myself. Let's have a look, see what we've got. Okay, so let's look at that main trading range. We can already assess we have this low to this main swing high. We have another high we can mark there as well internally. The market's potentially going to go to. So once we see this, we can then start looking at those internal breaks of structure bullish, which would have been here. And we haven't yet got to this high. The areas of demand. Okay, so we have an area of demand that we can mark here. Price never came back to that demand. And for area of supply would be here. Area of supply that obviously price hasn't yet come to. And that's it. Okay, so the market did drop down, swept this low. Okay, didn't quite get into the demand, but if we look at market pushed out, okay, so we do have a potential start of order flow there, do have a push out here, and you can see the market still holding within that candle even. So we're looking for that continuation yet to run towards this high. This sweep has shown me this, but we could see on the way down, we had some bearish order flow here on the way down on these candles that we pushed down, and that has been pushed through to the upside now. So I'm expecting to see this continue to be bullish as we hold within this area here. Okay, we swept the low, we've held within this candle. I'd like to see this market continue up to run this high. That is the optimal area. Now, if we see price goes lower here, we can see that the market started, okay, the bearish order flow there. And then we drop down with this candle. And then we drop down with this one. And then eventually we just pushed out. Now, it's not a strong push out, so we could hold here and continue lower, but I would much prefer to see the continuation higher, okay, basically to run for this high. So that is what I'm looking at on BTC. Now, remember, like I said, that I'm not a financial advisor. I share everything here is educational purposes for you to learn how I look at trading the markets. I was where you are right now, struggling, not understanding the concepts, and it does take time. You're not going to learn trading overnight. It takes weeks, months to learn things and to implement them properly. So I hope it's going to help you to understand the process of going through all these charts, to quickly mark up a 4-hour time frame, to understand what we're looking for. This is using the trading range, okay, using our structures, using our imbalances, and using supply and demand. And it obviously went through some of those sweeps. Now, all of that you can learn more within the channel as you go through those other playlists. We have a playlist for every individual part I went through in today's video. And that's what it's there for you to do, is go through those playlists and to learn. So that's what I suggest you do next, is go through to one of those playlists, okay, and to watch. And I'll put up first the market structure playlist. It's coming up right now. You go through and to learn more on market structure.